Hi, I'm Adam Geller with PC Investment Bankers, and today I'm going to walk you through the concept of seller financing in ESOP transaction, what it entails, how it fits into the capital structure, and why it could be valuable information for you or someone in your network. So what exactly is seller financing in an ESOP? In simple terms, seller financing acts as an IOU from the company to the selling shareholder to support the ESOP's purchase of the company's shares. Seller financing is used in the majority of leveraged ESOPs. However, its structure and terms are different if the seller financing is part of a capital structure that includes other debt, known as third-party finance transactions, or if the seller financing remains the sole source of capital in the deal, known as seller-only finance transactions. Seller financing is a flexible component of the transaction financing, tailored to ensure financial viability and sustainability for the newly formed ESOP. Although most leveraged ESOP transactions involve seller financing, some leveraged ESOP transactions raise a portion of the financing from third-party capital providers in concert with the seller financing component. This can be done through a combination of bank, unitranche, or mezzanine debt to cover a portion of the purchase, with the remainder provided through seller financing, referred to as seller notes. This third-party debt is likely senior, giving it a priority claim in a liquidation event, with covenants that place restrictions on company operations while that debt is outstanding. In contrast, the seller notes in this structure are often subordinated and may include covenants preventing principal repayment until third-party debt is fully repaid. Given the added risk, seller financing offers higher returns than senior third-party debt, often through a higher interest rate, paid-in-kind interest, and warrants, which are a long-term option contract that give its holder the right to purchase company stock at a set price. This ensures a fair return for the seller's increased risk. This structure is most common in scenarios in which the selling shareholder wishes to sell more than the third-party financing market is willing to finance, and liquidity at closing is preferred. When we look at seller-only finance transactions, the selling shareholder provides all the financing via a seller. With no third-party debt, these transactions are usually faster to complete and more cost-effective, avoiding the need for capital providers and their attorneys. The seller, as the sole lender, has the priority claim on the company's assets and greater flexibility to align debt terms with cash flow and goals, while avoiding the more restrictive covenants that accompany third-party debt. However, the selling shareholder has all the financial risk of the transaction and does not receive any upfront liquidity for selling their ownership stake. In turn, both the seller and ESOP are incentivized to ensure the company performs well over the long term, as all of the seller's proceeds are tied to the company's long-term success. This structure can make a 1042 tax deferral election difficult and is most commonly used when the selling shareholder isn't prioritizing personal liquidity as a goal in the transaction. The beauty of seller financing is that it aligns both the selling shareholder and the ESOP in the long-term interest of the company. Since the seller's returns, in the form of principal, interest, and potential warrant proceeds, depend on the company's ability to repay its obligations, this structure motivates the seller to ensure the business prospers. If the company faces difficulties, the seller may restructure terms to protect their investment and the ESOP's sustainability. Whether it funds a portion or all of the ESOP transaction, seller financing is a powerful tool in the ESOP universe. At PCE, we've had the pleasure of closing multiple leveraged ESOPs and have seen the advantages that seller financing can provide for our clients. Wherever you are in your ESOP journey, PCE is here to help you every step of the way. Thanks for watching this video. Be sure to subscribe and leave your comments below.